Well, hello, hello. Thank you for joining us. We're back here for another weekly video. We do these things every week, so hopefully you find some value in them. If you do, click the bell and subscribe. We can't wait to talk to you some more. But for today, we're going to just talk about mortgage rates. What's going on? Are they going up? Are they going down? Who knows what's happening? Josh, got any insight for us?
I do have some ideas, some insight as to what's been going on. Like for the last couple of years, it's been when are rates going to start to come down? And finally, over the summer towards September, we're like, yes, it's here. The Bank of Canada started lowering its rates. We've seen 1.25% of rate drops from the Bank of Canada already. We saw fixed rates drop from like the high 5% range down to almost 4% for 5-year fixed terms. And that was exciting. And then as it started looking like Donald Trump was going to win the US election. Leading up to that, I know that can't be the only reason, but kind of lines up really nicely with that as that started to happen. And then once he was elected a few weeks ago, we are seeing upward movement, not on the variable rates. The Bank of Canada is still making rates or lowering rates and is still planning to lower rates, but we're seeing some upward movement on the bond yields, which has a direct impact on the pricing of our fixed interest rates. So what
Gotcha.
happens
So,
in the
so Josh,
go ahead. Yeah.
just so we're clear here, what's happening is not because he is the president, but because he is going to be the president.
I think obviously there are a lot of things that factor into the pricing of the bonds.
Right.
The Canadian 5-year bond is the bond that directly impacts the 5-year mortgages, the fixed rate mortgages specifically. The bond yields in the United States is 10-year one, and Canadian bonds do the same, but they move on the basis of expectations. So
Gotcha.
like if we were to step back, we saw the 5-year bond yields lower before the Bank of Canada started lowering its rates. The expectations was that rates in the future would be lower, so we already started to see fixed rates drop. Now
Okay.
what's happening is, as a result of probable or expected additional inflationary pressures in both Canada and the United States, we're seeing kind of a rejig of the forecasts for how quickly the Bank of Canada and the United States Federal Reserve are going to be able to lower rates. And so we're seeing a bit of upward pressure on the bond yields that price those longer term rates. And we're seeing a reset of the expectation of how quickly we're going to see the Bank of Canada lowering its rate. Since the election earlier in November, we have seen the bond yield go up about 2/3%. Most recently, we've seen a little bit of downward movement again, so it's not that whole 2/3% spread right now today, but we did see from the low point to the high point, since the election, that big of a jump, and that was huge. And we saw corresponding rate increases on the fixed rates for 5-year fixed rates here in Canada of about 1/3% as well. So we've
Gotcha. Okay.
definitely been seeing that. It's not because of what he's done, because he's not the president yet, right? It's because of what the expectations are in the market. The market responds to expectations. We've also seen inflation numbers come in Canada. We expected it to come in at 1.9%, came in at 2. Like, whoop-de-doo. It's not very much of a difference, right? But
Yeah.
when the market's expecting one thing and the results are something else, the market reacts to that as well. And
Gotcha.
so we are seeing some upward pressure in Canada as a result. We're seeing now nobody's expecting a 0.5% rate drop on December 11th. Now it's generally considered to be a 0.25% rate drop, and how quickly the subsequent ones happen is more up for debate. We're seeing inflationary pressure here in Canada. We can talk about what our Canadian government is actually doing because they're actually elected and still here. And just in the last week, the Trudeau Liberal government has announced that they're going to send out $250 checks to most Canadian workers. They're going to cut the GST on some things like diapers and whatnot that probably should never have had GST on them to begin with. But, for each of us individually, receiving $250 from the government, awesome. I remember, 25 years ago when Ralph Klein was the premier of Alberta, we all got Ralph bucks and loved it. But if we're flirting with inflation, if it's only just barely where it needs to be, if we inject almost $5 billion, which is going to be the cost of this from government borrowing, is how they're getting the money. Injecting $5 billion is only going to put pressure on inflation. So while it will temporarily help us as individual families, it's not helping the overall picture of slowing down the increase in prices because now we're spending more.
So really the thought here is like he's gonna dump $250. Is it to every household? Probably
It's
the
to a
majority of
lot.
them. Probably the majority of them isn't going to make a difference because $250 is not that much money. But as a whole, this $5 billion they're printing, grabbing out of, it's just dumping more money. Almost kind of what happened a little bit on a macro or a micro level of COVID,
It's a
right?
smaller version of what happened with
Yeah,
the excessive borrowing to spend in COVID. And it
right,
needed to happen during COVID, at least to a certain degree.
right,
Looking back, probably should have happened as much as it did. But yeah,
right.
as we're pouring more money into the economy, especially when the economy is not fully stalled like it was early COVID,
Yeah.
it was to offset that. But now the economy is actually moving. It is actually growing, even if it doesn't always feel that way. And so to dump $5 billion of government debt into the economy is going to have some upward pressure, and it's making the job of the central bank harder to keep inflation in check, which is likely to slow down how much we're seeing that now
So
on
this
in the
might
American. Oh,
the
yeah,
timing
go ahead.
might be related to an upcoming election too, as well, right? So
I'm
maybe.
sure it is. I'm sure it
So
is, right?
yeah,
BNN says they're reopening the spending playbook, right?
yeah,
But when Trudeau was questioned, why are we doing this? It's going to have inflationary pressures. He responded the way he typically does. He didn't answer the question, right? We're focused on Canadians, he says. We'll let the bankers worry about the economy. But the unfortunate thing is, if the bankers are worrying about the economy, but the government is helping Canadians and causing inflation in the process, that actually hurts Canadians on the other side when it comes to
yeah.
interest costs. So
They
you
should
can't have
probably both
everything.
be. They should probably both be talking.
They
Making a
should,
plan
and they
together.
they they
Yeah,
don't seem to, right?
yeah,
So then on the American side, we're seeing the threat of tariffs. We don't know what that's going to look like. It hasn't
right.
happened yet, but the market's responding to the threat or the idea of what that's actually going to be. Just this past week, Trump announced on Truth Social that he's going to put 25% tariff on Canadian and Mexican imports, and also Chinese imports, with an additional 10% on Chinese imports. And he blamed it on because our three countries are letting fentanyl and illegal migrants into the country. And once we fix that, he'll back off on it. Exactly what it's going to look like, we don't actually know. The market's reacting to what he's saying, right? If you put tariffs on imported goods, the economists say that means those goods are now more expensive. If the goods that you're purchasing in the United States are more expensive, that equals inflation,
Yeah.
right? Over the long term, who knows?
So
But in
really,
the short term, yes.
what I'm hearing you say is there's kind of like two things here, right? The market's reacting to what the Trump administration policies could potentially do, as well as has the market reacted yet to this GST sort of holiday check thing?
The market has what's happened with the GST holiday check, all that sort of stuff. It's more about the economists adjusting their expectations and their
Right.
forecasts for the Bank
Okay.
of Canada rate drops.
Gotcha.
Right? It's the U.S. stuff. It's the U.S. is really what impacts our bond market more than anything. The Canadian government and Canada as a whole, we're so small relative to them that the U.S. is the elephant in the room, right? It takes up all of the space and it has most of the impact. So that's what's causing the fixed rates
Gotcha.
to a large
So
degree. Yeah.
So really, time's going to tell. January, sometime January gets, I can't remember, 9th or something, gets sworn in, right? And so really, we'll
Yeah,
see
I
what
think it's the
happens in those first.
20th.
Yeah.
Yeah. So
So
the
maybe the
inauguration
first
will
30
happen.
days.
We'll see what he
We'll,
actually does on day
yeah.
one. We'll see what he does in
Yeah.
the first 30 days. We'll
Yeah.
see if the rhetoric from the campaign trail translates into actual action in
Yeah.
office. We'll see what the impact of almost $5 billion of borrowed money from the government of Canada to
Yeah.
pay for votes here in Canada, what the impact that actually has.
Yeah.
Things are a bit less certain than they were a few months ago. We are likely to see some downward rate movement still from the Bank of Canada. That is the expectation. But in the short term, we're seeing that upward pressure on the Canadian fixed interest rates as a result of upward movement by the bond traders.
Gotcha.
And
So,
that's what we have. Uncertainty, still generally down, but in the short term, we're seeing that upward movement on the fixed. And that might push more people into the variable rate mortgages. We'll see over the coming weeks and months.
gotcha. December 11th is the next big day. Join us for then. We're going to get the Bank of Canada's announcement. But anyway, between now and then, we're still, like we said earlier, we're going to sort of let these videos out every week. Join us, comment. If you need any help with your mortgage or you're looking for real estate, our numbers are on the screen. We look forward to you reaching out. Thank you once again for joining us this week.
Thanks, everybody.